Howdy, everybody. Welcome to Liberty Call. Today is Thursday, August 29th, 2024. Hope you're having a fantastical day out there in the interwebs. It's another beautiful day here in Colorado. Lots of sun. I got a chicken smoking on the back patio, and I smell like a barbecue restaurant right now. So anyways, I hope you're having a great day out there. Looks like the markets were in a fairly good mood, and well, at least until the last bit of the day. We'll look at the charts and go through that. I think it had to do with the GDP numbers being revised up, which is a little bit surprising, but we shall see. All right. Well, if it is your first time watching a Liberty Call, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press that notification bell. All right, let's hop into today's numbers. Dow Jones was up 0.59%, 243 points, closed at 41,335. S&P 500 flat, up 0.06, 3 points. Closed at 55.95. NASDAQ down 0.21%, 36 points. Closed at 17,519. And if we could pause there, we'll go to the charts. And here's starting out with the Dow. We'll look at the minute chart. And, opened up, big gains. And then something happened here in the afternoon. It dipped down and still closed with a pretty positive gain. Going over to the S&P 500, same thing, between 2 and 3 Eastern. I haven't looked to see what the news that came out right at that time. I've been busy on some other stuff, and same thing with the NASDAQ. It just never regained that finishing in the positive. So, all right, let's get that off the screen. All right, get back to the markets. Or the indexes, the VIX was down 8.71%. It's at 1562. Canada up 0.43. Brazil down 0.96. And Mexico up 1.28%. Over in Europe, Germany was up 0.64. The UK up 0.43. France up 0.84. The Netherlands up 1.43%. Spain up 0.23, Italy up 0.92%, Switzerland up 0.61%, and Portugal down 0.07. Russian exchange is both green today. The MOEX up 0.31, the RTSI up 0.3. And the overnights, the Nikkei in Japan was down 0.05%, Australia down 1/3, New Zealand down 2/3%. In China, the Shanghai was down 0.5%, the Shenzhen component up 0.94%. China A50 down 0.77%, DJ Shanghai down 1/10, Hang Seng up 0.53%, and the Taiwan weighted up 0.84. All right, so good stuff. Let's jump over to the market recap and see what happened today. S&P 500 gives up some gains as Nvidia slips, but GDP data keeps downside in check. All right. The S&P 500 saw its gains erode on Thursday, largely due to a drop in Nvidia's stock, though positive economic data helped mitigate the downside. The U.S. economy showed resilience with a stronger than expected GDP growth of 3% in the second quarter, surpassing the 2.8 forecast and significantly improving from the 1.4% growth in the first quarter. Additionally, initial unemployment claims for the week ending August 4th stood at 231,000, slightly below the expected 232, indicating a still strong labor market despite widespread corporate layoffs. The anticipation of an interest rate cut in September has buoyed markets, with Federal Reserve Chair Jerome Powell hinting at the possibility during the Jackson Hole Symposium. However, Nvidia stock fell over 6% after providing a softer than expected outlook despite beating profit expectations for the May through July that's not a quarter, through the second quarter, and announcing a $50 billion share buyback. Analysts remain optimistic about Nvidia due to continued strong demand for AI chips, particularly from cloud service providers. In other corporate news, Dollar General's stock plummeted 20% after the retailer slashed its annual same-store sales forecast, citing reduced consumer spending on higher margin goods. Conversely, Salesforce reported strong second quarter results and raised its profit outlook, though its stock remained flat. CrowdStrike gained 4% following better than expected earnings, despite cutting its revenue and profit forecast due to a recent global outage. Affirm Holdings surged 29% after posting strong quarterly results and indicating it could achieve operating profitability by the end of the fiscal year. All right, so that's everything for the news today. Let's hop into some data. Second quarter GDP This is the second revision or the first revision that's come out after the first numbers last month. So this was put together by Strider Elas, senior economist at First Trust. So let's see what he had to say. The key takeaway from the latest economic report is the solid performance of corporate profits in the second quarter. Economy-wide corporate profits rose by 1.7% compared to the first quarter and were up by 8% year over year. Domestic industries led the increase with a 2.7% rise, while profits from the rest of the world declined by 3.5%. Notably, when excluding losses from the Federal Reserve, which has been generating significant losses due to higher interest rates, corporate profits still grew by 1.3% for the quarter and 6.4% year over year. The report also revised second quarter GDP growth upward to 3% annually, driven primarily by stronger personal consumption in services and non-durable goods. Core GDP, which focuses on sustainable growth factors like consumer spending and business investment, rose at a 2.9% annual rate, higher than the previous estimate of 2.6%. However, real gross domestic income grew at a slower 1.3% annual rate, suggesting the GDP growth might be slightly overstated. On the inflation front, the GDP price index was revised up to a 2.5% annual rate in Q2, above the Fed's 2% target. Initial jobless claims fell slightly to 231,000, while continuing claims rose to 1.868 million. Home prices showed mixed results, and the Richmond Fed's manufacturing index declined further in August. And the M2 money supply inched up by 0.1% in July, indicating moderate pressure on inflation and nominal GDP growth. All right, so that's some good stuff there. So better numbers than what we were than the first batch that came out for Q2. So I would imagine that when the final numbers come out next month, they'll probably be somewhere in that 2.8, 3%-ish range. So anyways, no, not too bad. So again, that's the past. We're heading into the future, so no telling where that's going to take us. All right, next up, I got an article here from Zero Hedge. A sales recovery did not occur. Pending home sales crashed to record low. So that's not some positive news. Pending home sales in the U.S. experienced a significant decline in July with a 5.5% drop month over month, far missing the expected 0.2% gain. This followed a modest 4.8% increase in June. Year over year, pending home sales fell 4.6%, which, while slightly better than June's 7.8% plunge, still missed expectations of a 2% decline. As a result, the pending home sales index fell to 70.2, marking a fresh record low. The decline in pending home sales reflects ongoing challenges in the housing market, including high borrowing costs and limited inventory. Despite recent declines in mortgage rates to below 6.5%, affordability remains a significant barrier for potential buyers. The drop in sales was seen across all regions, with the Midwest and South experiencing the largest declines. The Northeast had the smallest decline, and the region has performed relatively better than others in recent months. The National Association of Realtors chief economist Lawrence Yun cited affordability challenges and a wait-and-see approach related to the upcoming U.S. presidential election as key factors preventing a sales recovery. Lower mortgage rates spurred by anticipated Federal Reserve interest rate cuts could potentially attract more buyers, but the market has yet to see this translate into increased sales. Well, unfortunately, I think home prices at some point are going to, come down quite a bit, because especially if interest rates stay where they are, which I don't think that they're going to. I mean, yes, they may cut rates. I just don't think they're going to, massively drop them significantly. So, I don't think we'll go to zero unless there's something terrible that happens in the economy. And, just a drop in the stock market, personally, that's not a reason to drop rates personally, or at least in my personal view. All right, got one last article here, some commentary. Peter Schiff, Fed's pivot is misguided. And this comes via schiffgold.com. This is probably one of Peter's most recent podcasts, which I have yet to catch up on. So maybe I'll get to it later today. All right. So in this episode, Peter discusses the Federal Reserve's conference at Jackson Hole, where Jerome Powell signaled a potential shift in monetary policy, and delves into recent political events, including the DNC and Robert F. Kennedy Jr.'s endorsement of Donald Trump for president. Peter expresses skepticism about Powell's confidence in reducing inflation to 2%, noting the current inflation rate is still around 3%. He critiques the Fed's dual mandate of controlling both inflation and unemployment, highlighting the tension between these two goals. He points out that while the Fed initially sought some labor market weakness to curb inflation, Powell has now shifted focus to avoiding further unemployment, which Peter sees as a pivot away from fighting inflation. He also argues that the Fed's manipulation of interest rates has led to a precarious economic situation where raising rates after a period of low rates could lead to an economic collapse due to widespread debt. Shifting to politics, Peter criticizes the DNC for its harsh rhetoric against Trump, claiming that many of their accusations are lies or distortions. And if I could pause there, I would wholeheartedly agree. I mean, I didn't watch the DNC because they're idiots, in my opinion, but I've seen enough of the sound bites and clips of each of the big people speaking, and I mean, there's three things that they are still holding on to, which are complete falsehoods. One, that Trump is a Russian spy. There's actually more than three, but that he said that Nazis were fine people at the Charlottesville thing, which he never said. He said there were fine people on both sides of the argument about removing the statue, which is true. I'm personally, I think they're removing a Lee statue, which I would be offended by that too. I'm a fan of Lee personally. And what's the other? Oh, the drinking bleach hoax, that he told people to drink bleach, which was, again, a complete lie. I remember watching that, him talk about it at the time. It was talking about putting like UV light down, into your throat or into your lungs to expose the, pathogens to the ultraviolet, which would kill it. He was trying to, he was just, again, he rambles and kind of like me sometimes. And, in a way, he did use the word disinfecting, disinfect, but not in the way of like, Pine Sol or something like that. So, I mean, those are just some of the few that are complete fabrications that, people just hold on to. And you hear them say it. It's like, come on, people. All right, jumping back in. He contrasts this with RFK Jr.'s endorsement of Trump, which he views as a positive development. Peter sees this as a potential unity campaign that could challenge the political establishment and address issues like ongoing conflict in Ukraine, which he believes has been a disastrous and costly failure. He emphasizes the need for leaders like Kennedy and Trump who are willing to oppose the entrenched interests driving these conflicts. Yeah, most people are the deep state wants to keep the wars going on in the Middle East and Eastern Europe because, in Eastern Europe, it pisses off Russia, which for some reason the deep state, I understand it, keeps us making bombs and planes and all that good stuff, which keeps, Boeing and Lockheed and Raytheon and all those defense contractors, fairly wealthy. And, the stuff in the Middle East, because, Israel is the 51st state. So we have to, go broke to, protect them because they are terrible neighbors to their people around them. So anyways. All right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be handled there. So feel free to give me a buzz. I'd be happy to help. All right. Well, like I said, that's everything that I had for today. Me and my main man, Jake, are going to go play some ball in a minute. See if he moves. He didn't move. And then we're going to go watch the chicken smoke for the rest of the afternoon. And then there's more Astros baseball this evening. Yoo-hoo! They're home from their road trip, which was not great. I think they went like 3-4, which, not great. All right. Well, hope everyone has a fantastical evening, and I'll talk to you again next time. Adios.